And in 100% of the circumstances I've shown you on this chart, going back 60 days basically, you would have made money every single time if you were following strategy like this. Right now, while you're watching this video, Bybit and PrimeXBT together are offering you guys $12,000 in deposit bonuses, which is risk-free capital that you can trade with. If you make money, you get to keep it. If you don't make money, it was never yours to begin with. No loss on your part. You can take advantage of that by following the links in the description down below. And down there, you're also going to see a Google form, which if you sign up to Bybit and make a small deposit, you can actually fill out that Google form and gain access to one of my products that I give to all VIP members for free. I would easily say it's worth $200 because it's key strategies and lessons that I learned as a trader over the years that have saved and made me hundreds of thousands of dollars. You're going to be getting that for free when you check out that Google form link in the description down below. I don't want to waste your time with more of that right now. I'm going to talk about it later on in the video, but if that's something that interests you, pause the video now, check it out, and I'll see you on the other side. Look, I'm not even going to beat around the bush on this one. This is a very difficult market, ladies and gents, but let me tell you something. Times like this, right now, in this market that we're in at the moment, are where many of the best traders that make money in markets like right now and that absolutely slay when we enter new bull markets, those traders are made in these markets, in these market conditions. And if you don't believe me, you can go ahead and look at all of the top traders that you can find online right now. Many of them will have had their big come up in years like 2018. What we're in right now, 2022 and now in 2023, we're in a worse situation than what we saw before, and I guarantee you that means we're seeing even more hardened traders coming out of it. I even made my name as a trader that many people respect in this space from that initial kind of 2018 bear market. That's where I really started to shine. That's how I got to the position I'm in right now, because it is markets like this where if you can survive them and trade them well, you are going to do incredibly, incredibly well. And in this video, first of all, I want to show you something. I want to show you something really, really cool that's going to completely change the way you think about trading. And then in the rest of the video, I'm going to show you how I plan on implementing certain strategies and key things along the way throughout the rest of this year in order to trade this market well. This is going to be a path to potentially become a crypto millionaire in 2023. If that's something that sounds exciting to you, the first thing I need you to do is understand that this is going to be very fucking difficult. And if that is something that scares you away and you'd rather go back to your altcoins and your NFTs and your shitcoin projects where you can get into the seed rounds and stuff like that or whatever, then obviously this video isn't going to be for you, and you can go back to the other shit munching YouTube channels out there that feed you absolute total crap that don't work. This will work. It's just going to be incredibly hard. So here we go. These are things that I'm about to show you that have done incredibly well for me in the past. These are things that I swear by, that I live by, that I teach my traders inside of VIP as well. I can't wait to share it with you. But before we get to all of that, what I want to show you is just some really quick basic math, right? I just want to show you something that's absolutely essential. And if you're subscribed to me already, you're probably going to know something about this if you've been subscribed for a while. And it's just the power of compounding profits, right? I just want to take a standard $10,000 starting balance, which I know not everybody starts with. It doesn't matter. It's just an easy number to work with. And I want to multiply that by 1.3. So basically, I want to add a 30% profit on that. And the reason I'm taking this number in particular is you're going to see in just a moment that pulling off a 30% profit in markets like, even markets like this, isn't particularly difficult. I'm going to show you why in just a moment, but for now, just stick with me and just trust me when I say that 30% profit isn't crazy. Certainly not super easy, but definitely not crazy. And what I want to show you right here is the power of compounding this. You know, a lot of people, they think like, how do I get rich? I need to get into one coin that's going to fucking blow up and make me a lot of money. That will work, but chances are you're not going to find that coin unless you have insider information. And even if you do, you might be wrong. You're going to have to wait a long time. What I'm going to show you is much more direct control. I'm not one of those guys that picks altcoins and just waits for them to maybe blow up. But then, you know, I end up losing 80-90% of my money during market cycles like this, right? Like it just doesn't happen to me. The reason I've been so mentally stable throughout this entire market is because I don't do horrible strategies like this. I like to take control of my finances a little bit more directly, and therefore, you know, have a little bit more direct input into what I get, you know, on that output side of things. So 30% profit on a 10K position. Obviously, everyone's looking for those home runs. What I'm trying to do is just show you with some basic math. You can already see that I've done some of this, but I don't want you guys to focus on that stuff right now. What I want to show you is what happens if you manage to pull a 30% profit twice in a row. You're up to $17,000. And crucially, this is the key number. If you manage to pull a 30% profit 3 times in a row. So again, not a particularly crazy profit, something that's definitely quite achievable. Not easy to do 3 times in a row. I know we're going to get to all of these nuances in a minute, but if you just look at what the math shows, it doesn't take much to double your money. Okay, it doesn't take much to double your money from any starting balance, right? I showed you $10,000 because it's an easy number to work with, but we can go to $40,000 and it'll double your money after 3 of these profits in a row. We can drop down to $2,000 and you're going to see the very same result. No matter what you choose, if you manage to pull a 30% profit 3 times in a row, compounding it, that's where the real power is. It's not easy to find a coin that you can buy at $200 and sell at $400. It's certainly not quick. It certainly isn't going to make you a millionaire anytime soon. And to be honest with you, neither will this, but this is just much more direct in terms of how much control you have into your own success, right? Instead of just blindly putting your money into some shitcoin that a YouTuber talks about, you can actually directly influence what your results look like with what I'm going to talk to you about in this YouTube video. And obviously I gotta, jump in here and just, flash my disclaimer on screen real quick. I'm not a financial advisor. Don't be an idiot. Do your own research and all that stuff, obviously. But what I'm showing you here is that the power of compounding is what you should be focusing on as a trader, in my opinion. It's not in getting those home runs. It's about consistent, manageable, achievable profits that you're able to pull off and do so safely, where the real power comes in. If we simplify this and just use 1.3 to the power of 3, this is the same thing, just for those of you that haven't done this kind of math before. I want to show you something really cool. So we're back to $10,000 now, showing you what would happen if we pull 3 of these in a row. What happens if we pull 6 of these in a row? Look at this. We're now up to $50,000. We've managed to pull a 5 times gain with 6 of these profits in a row. Again, the chances of you pulling 6 30% profits consecutively in a row are damn near 0, right? I mean, broadly speaking, that's not going to happen unless you've got some superhuman trading abilities. But again, the point still stands that these are easy numbers to achieve, and it's just to show you the power of compounding these gains. 9 of these in a row. We're only talking about 30% profits. 9 of these in a row will multiply whatever starting balance you have by 10 times, all right? This is the crazy, in my opinion, just absolutely underrated power of compounding. Everybody is aiming for these home runs, and we're all ignoring that these little pennies we can stack on top of each other are what actually get us rich in the game of trading. This is what we actually should be aiming for. And when you look at people that are in the property space that want to make money, it's never at the beginning where you make a lot of money. It's only when you've had a big kind of portfolio of properties that are all rising by 8% a year. That's where you make a lot of money. It's not by buying one property that rises by 8% in a year. That's not where the money is. It's when you've got 100 of them or 1,000 of them. The kind of wealth that you and I probably just can't even touch, because we don't have enough money to buy 1,000 houses across the country. But this is something which, again, can be a lot more achievable. Very, very important. And I need you guys to keep this in mind for the rest of the video, because what I want to cover with you now and for the rest of the video are key ways that I think it's possible to pull this off. I don't know if it's going to work, but I'm certainly going to be doing it this way. It's the same way I've been trading for, I've been in this space now for, this is like my 6th year, if I'm not mistaken now. It's been a very, very long time. Yeah, this is going to be 6 years and a few months of me being in the crypto space. This is what I'm going to be doing. These are the key things I'm going to be keeping in mind, and I really hope that they can benefit you as well. So without further ado, let's get straight into it. So as you may already know, if you've been watching this channel for a while and hitting up the like button and stuff like that, thank you all very much. My weapon of choice to achieve pretty much all the gains that I realize in these markets is leverage trading. And if you don't know what that is, if you've never heard of it or anything like that, or you just want more information on it, then click on the information icon on the top left, top right of the screen right now and watch my video on that. It is a free video. It is an incredibly comprehensive video, and it shouldn't be free. So go ahead and check it out and then come right back to this one. What I want to show you is how this can be achieved even in ranges like what we're in right now. I want to show you a very, very simple trade setup right here. Something that I've even spoken about on this YouTube channel previously, about how, for example, this green box right here is an area that I expected could turn out to be support for Bitcoin. doesn't necessarily mean that it would be support. In this case, it happened to be support 2 times in a row. And what I want to show you specifically is that if you were to open up a long position on Bitcoin at the very bottom of this green range and trade it to the top, which realistically wouldn't have happened, obviously, because we just don't manage to time the tops and the bottoms very well. But just if you could do it, I want to show you how little it would have taken to pull off a 30% profit from this low up to the high that we set using 10x leverage, which some people would consider fairly high. For me, it's actually quite normal, and most other people consider this to be quite low actually in this space. If you take a 10x leverage position, which to me I would just consider to be a normal amount of risk, maybe just a little bit higher than normal amount of risk, this would have netted you from this low to the top that the market managed to set within basically 1 day. It only took 1 day to reach this level, would have netted you a 38% profit. If you did the same thing from the very same level, but this time up to our current price level, it would have netted you a 55% profit within 10 days. This just goes to show you how this isn't actually particularly difficult to pull off. This area, for example, which we used as support, you could reasonably expect would be support again. Doesn't mean that you should expect it to be support, but I think it's fair to say that some people would have expected this previous area down at 15,500 to be support simply because it was support before and it ended a very steep sell-off. And so if an area ends a very steep sell-off, it is definitely sensible to expect that it could be support again. Again, would I trade this? Not necessarily, but again, just to make a point, if you were to take that same 10x leverage position and trade it right from this bottom up to the top, you would have netted a 79% profit. It's a 7.98% move. We're using leverage, remember, 10x leverage, that would be a 79% profit. Even if you don't ride it all the way to the top, if you just trade the first candle, the first breakout candle, that's still a 45% profit. In fact, you only need to trade this much of a move from here up to here. I mean, it's such a small, insignificant portion of the chart to net that 30% profit. If you're looking for resistance hits and you short the top of this range down to the bottom, down here, down to this low, you would have already gotten yourself a 28% profit. From this top down to this bottom, you would have gotten yourself a 34% profit. And from this top down to this bottom, you would have gotten yourself a 23% profit. These numbers are not particularly difficult to achieve, certainly not as much as you might expect. And obviously the real challenge is in pulling this compounded one after another. All right, so I want to kick this off with something that isn't actually even particularly conventional to talk about in this market right now. And it's about one of the unique challenges that we have as a trader. If you're looking to really run up your account balance during this year, one of the key things you're going to have to know as a leverage trader is that we have a lot of sideways ranges right now. If we take a look at what this chart has looked like, let's actually take a naked chart right now just to make this a little bit easier to see. If we take a look at a lot of the trading ranges we've had pretty much since May and onwards of last year, which is, May was month 5, so basically most of last year and all of this year so far, the only thing the market has been doing is entering sideways trading ranges and then leaving them with big abrupt breakouts, right? So we had a sideways trading range here, we had a somewhat sideways trading range here, and we're in another sideways trading range right now down here. That's pretty much all we're doing. There are a few exceptions, and I'm going to talk about the exceptions. One of the exceptions are deviations like this. One of the exceptions are breakouts like this. We'll get to both of them shortly in this video, but what we need to be aware of in market conditions like this is that we get a lot of sideways trading ranges, and I don't know if that's going to stop happening in 2023. That's a pretty hard prediction to make, but I think it's safe to assume that something similar might repeat this year. Doesn't mean it will, but it certainly might. And if we do see something like this, the easiest thing to do in ranges like this is identify where our areas of support levels are and where our areas of resistance levels are. So let me show you a great example. It's easier with this range, but you can apply it to all of the ranges, and I'm going to do it for you very quickly. The first thing that I want to do is just kind of take a look at where some of our key areas on these charts are. If I just drop a horizontal line right here down at this area of support, a horizontal level right here at this area of, well, now it's support as well, but it was previously resistance after, just a few days ago. What we can see is that we're finding quite consistent rejections in these price ranges. I can actually show this to you a little bit better on a Bitcoin chart where I can zoom in. So let me go ahead and do that. Let's use the Bitfinex chart for this one. And what I want to do is just take this over to the 4-hour time frame and show you the very, very same thing here. Where if we're looking at our sideways trading ranges, let's tighten this up a little bit. Let's use this sideways. Let's use this support and this resistance right here. Look, I think it's fairly safe to say that, kind of taking long positions up on this green line and taking short positions on this green line and long positions on this green line would have generally resulted in some nice positions. We did get fake outs, and this is something, like I said, that I'm going to talk about in just a minute, but because we're entering sideways trading ranges, if you want to be able to pull off these kind of gains, the only way you can do it in a sideways trading range is really just by shorting these tops and longing these bottoms. So your job as a trader in circumstances like this will be to identify where these support and resistance levels are, and then based off all the facts you have available to you at the time, decide if it's worth, for example, placing a long position at these support levels, waiting for the price to drop down into them, and then looking for that run up. Once we get those runs up, again, depending on what kind of leverage you're using, if you're using 10x, for example, these numbers can get very impressive very quickly. If you've got a rule to just close your position out every time you hit a 20% profit, that would happen after a 2% swing, right? Even up here, if you take a short position, you're getting these 2% swings very easily. The market actually moves a lot more than 2% during instances like this. See, sometimes it will take a while, but a lot of the time, I think just setting a target for a 2% profit, for a 2% move, isn't like super out there. It's not actually that crazy of an idea, and we're managing to get them quite consistently. So if you're able to pull that off and you just make a rule that every time your position closes, every time your position reaches a 20% profit, 30% profit, 50% profit, depending on, kind of how aggressive or how conservative you want to be, you will see that a lot of the time that would work out if you're looking at sideways trading ranges like this. The reason that this is actually a really powerful one, and the reason I'm starting this video off with it, is because this is one of those things that can really add up over time. You might not get a lot of opportunities to pull this off. I want to make this very clear to you. I mean, there's a lot of fake outs back here, but even if you just started to do this at the beginning of this range, which also wouldn't have been possible because it takes time to identify these areas of support, right? You would have had to wait for at least up until this point right here, at which point you would have messed up if you entered a long position right here, in order to notice that this line has consistently behaved as support for the market. Not only with this wick over here, not only with these candles right here, but also with these slightly more zoomed in bits of price action right here, where we've consistently managed to see nice bounces off this level, with 2 exceptions only, other than the initial big exception right here, which wouldn't count because you wouldn't identify the area of support back here. You would have only been able to identify the support at this level. You would see that we're, fairly consistently, with these 2 exceptions, we're getting nice bounces off this level, right? I mean, there's 1 bounce here, 2, 3, 4, 5, and then 2 fake outs. So you've got a 5 out of 7 hit rate up until this point. The point is it will take you a while to identify if this actually works or not. On this occasion, if you decide to enter that long position, you would have probably entered a loss because the market dropped by quite a bit. If we take a look at how much the market dropped below the support level, this was a 5% drop. And again, if you're using that same 10x leverage, that's a huge loss. That's way too big. Most people are not going to be comfortable sitting in a loss like that. I certainly wouldn't, and I would have closed my position out and eaten that loss at roughly 20-30% loss. But the next few times that it happens, you'd be making money quite consistently. As soon as we get above this line, you've got 1 successful position, 2 successful positions, and 3 successful positions right here before it fails you again, and then it works again after that. So from this point onwards, so from after this point, you've got 1, 2, 3 failure right here, 4 out of 5 successful positions right here. When you do the math on this, you start to look really, really good. If you're going for that 2% rule, you would have successfully closed out your position there with a 20% profit using 10x leverage again. If you're using, the 2% rule here, you wouldn't have quite hit it, but you would have gotten close, and the same for this next circumstance right here. So obviously you've got to tighten these rules. You've got to be moving your stop loss, placing it at break even and stuff like that. There's obviously a lot that goes into it. And if you want to know all about that stuff and really just understand the game in and out, especially like the way I do it specifically, if that's something that you think would be interesting to you, you can follow these links on screen right here. This link in the description down below to my 𝗬𝗪𝐻𝐿 Gold Telegram channel, and then click on my name at the bottom of any post there, and then send message to join my 𝗬𝗪𝐻𝐿 VIP group. Now, the reason that this is huge is I'm teaching you absolutely everything I know about trading from A to Z inside of these groups, because you're going to be getting free access into my 𝗬𝗪𝐻𝐿 Academy courses for most of you guys, where I teach you everything I know about trading from A to Z, but you're also going to be seeing how I implement that in these market ranges right now live with you all as well, which is an incredibly powerful combination to be able to get them both at the same time. And you'll see that there are a lot of other nuances that go into this. Obviously, this video can't be 100% comprehensive, because if I could compile such valuable information into a 30-40 minute video, then everybody would be rich within a few days. Obviously, it's just not that easy, but there is a lot that goes into it, and I tell you absolutely everything to do with my thought process inside of VIP, along with the actual trades I'm taking in real time as well. So I tell you when I'm planning a trade, what I'm planning on doing down to the dollar level that I'd be entering, and when I commit to that trade, what I'd be doing when I'm in the trade. I give you updates on those positions as well. A lot of very valuable information, because again, one of the key things to keep in mind is you will most likely want to be keeping stop losses tight and stuff like that. And there are strategies here to make sure that you don't lose money. But what you will see is once you've identified these areas of support, the next opportunities would go very well. Like I said, 4 out of 5 hit rate up until this point. Now you've got the 5th successful trade. If you count this, you've got the 6th successful trade, or if not, this would be your 6th successful trade, and that is 6 out of 7 successful trades after this point, which is a very good hit rate, guys. I mean, for the most part, you'd be doing very well if you're able to identify this area of support. And I think that gives you potentially some great opportunities to trade these markets with, again, we're not getting huge amounts of volatility, but at least to be able to long those bottoms. And then, it's the very same thing on the upside. I mean, this would have been a little bit harder, but we did enter what I think was quite an obvious, range of resistance right here. So the first obvious, kind of short position would have been this one right here. This one was dangerous because the market did wick quite high above our resistance level, but we did still drop down quite nicely. Again, using that 2 to 3% rule, you still would have hit that 20% profit right here before the market eventually managed to rally to the upside. So that actually works out quite well. Now, the big thing that really is what's going to set this video apart. And guys, what I want you to focus on, right, when we're in this kind of environment, is just look at the kind of people whose videos you're watching and really digest the kind of content they're covering. What you're going to see in this video is, because I'm actually a trader, which I don't know if you guys have figured out by now, but most of the biggest YouTubers are not. They certainly do trade. They're just not traders first and foremost. YouTube is a very lucrative platform. You make money in a lot more ways than just trading. And actually trading wouldn't be very high up there in terms of the ranking of income, right? So I really want you guys to keep this in mind when you're coming to YouTube or really any social media platform for education. Most of the top people that you'd be listening to aren't actually traders first and foremost. What you're going to see with channels like this one, where I am a trader first and foremost, is that we're accounting for the real world situations that fuck up your trading plan. Because the reality is, when you learn about these things in a textbook, when you learn about these things, in a video course and stuff like that, it's very easy to make every trading strategy look perfect, especially if you pick out the right opportunities in the market. But what's much harder to do, and really what you can only do if you've got all that real world experience, is acknowledge that there are going to be a lot of instances where your trading plans just don't work, where they just go wrong. And one of the key examples of that I want to show you in this YouTube video right here are deviations. And those are the exceptions that I was talking about. You see, we form these exceptions a lot. If we take a look at where the bulk of the trading has happened in this price range, take a look at this. So from this point up until this point right here, we spent 13 and a half days trading between this green, these two green lines right here. From this range up to where we are right now, we spent a further 24 days trading in this range. That's a very long time. There's only one exception, which is from here to here, where we spent 3 days trading outside of our two green lines. Over here, we spent 3 days trading outside of our two green lines. Over here, it was a day and a half, and over here, it was just a matter of 8 hours and then another 4 or so hours as well. My point is that most of our price action, time-wise, in terms of how much time we spent, happened between these two lines right here. But we had a number of exceptions. We had the first exception here, which, like I said, doesn't count, but we had this exception right here, which actually counts as 2. We had this exception, and this exception. These would have all really screwed you over. And this is the next key thing that I want to build on when we talk about this. If you want to be trading consistently throughout this year to potentially, really run up your account balance, is that you have to be aware of deviations. This is where the market really screws you up. What is the right word I'm looking for? Screws you over. And the reason for that is because if you're not keeping tight stop losses, you're going to get wrecked on moves like this. You might not get liquidated, right? If you don't set a stop loss, you might not actually get liquidated. Let's calculate it for this one right here. See, this was a 6% move to the upside. So if you're using 10x leverage, your liquidation point is going to be like 9.5% away, because 9.5 times 10 is a 95% loss, and that final 5% is the margin for the exchange. That's what they pocket. Usually, if you're on Bybit, for example, that might go into your insurance fund. And by the way, if you're thinking about which exchange to use, Bybit is my primary exchange. I've been using these guys since 2018, 2019, so it's basically been like 5 years now that I've been using them, which is it 5? No, probably 3 or 4 years that I've been using them as my primary exchange. I've been using them since before I even started to work with them and promote them. I absolutely love these guys. This is hands down the best exchange in the market, in my opinion, and it has been for a very, very long time. They're offering you $5,000 to trade these markets with a deposit bonus, meaning that depending on how much you deposit and trade, you're going to be getting a bunch of free cash deposited into your account. And the cool thing about this is basically demo money. So if you're interested in trading basically a demo account, what's cool about this is you can trade with these $5,000 like it's a demo account, but if you make money with that $5,000, that's yours to keep. You can actually withdraw that money. And if you lose it, it was never your money to begin with. This is free money that the exchange is giving you. Prime XBT is the other exchange I want to highlight to you guys, where you can actually trade all these traditional finance markets as well, these indices like the S&P 500 and commodities like gold, silver, and oil, and Forex. You can trade all of these, and they're offering you a slightly higher bonus of $7,000. This is a really clear-cut bonus because just basically depending on how much you deposit onto Prime XBT, you're going to be getting 7% back as a deposit bonus. Meaning, if you deposit, for example, $10,000, you get $700, and you can just trade that. Like, you can trade those $700, you can leverage it up, you can apply 10x leverage to it, whatever you like. And if you make money using that free cash they're giving you, you get to keep it. If you don't, again, it was never yours to begin with. Bybit and Prime XBT together are offering you $12,000 in deposit bonuses when you use my links in the description down below. So that is well worth checking out if you want to be able to take advantage of these markets and do it risk-free, but still potentially keep your money. It's a ridiculously good offer, and you literally don't have any risk for taking it on as well. So well worth checking this out. But back to the point of this video here, these deviations are where you could really screw yourself over. And like I said, if you're using something like 10x leverage, you wouldn't actually even get liquidated because the moves aren't that big, but it would certainly be very, very uncomfortable. And I think that's something we need to keep in mind in ranges like this. The market likes to deviate a lot. And so if you're somebody with a higher risk tolerance, somebody that can tolerate potentially seeing a ridiculously large loss before you enter a profit again, if that's something you think you're okay with, you'd have actually done really well in this range. If you traded every long position on this support level, you wouldn't have dropped out of any single long position right here. Like I said, at most, this would have been a 55% loss. If you're comfortable stomaching that, and if you think you can sit with that for 2.5 days potentially, or even longer, well, you would have actually ended up being able to pull off some nice profits. This wouldn't have stopped you out. This wouldn't have liquidated. None of these moves would have liquidated you. And in 100% of the circumstances I've shown you on this chart, going back 60 days basically, you would have made money every single time if you were following a strategy like this. Again, if you apply this over a long enough time horizon, this is the kind of thing that will add up. None of these profits in and of themselves are particularly impressive, right? I mean, we're only looking at 20%, 30%. If you want to be aggressive, call it 50, whatever. But we're not looking at huge profits in any of these single trades. But when you compound them, that is a lot of things going in your favor. If we bring ourselves back to that calculator I was showing you, and we look at, for example, I showed you 6 out of 7 trades would have gone well, assuming you got them in a row, which you wouldn't have, obviously. If you did, and you're looking at a 30% profit, that's already pulling a 5 times return on your money. If you're getting that 20% profit, you're still pulling a 3 times return on your money. And that would have only happened within a matter of about 45 or so days. That is a really, really good time frame to pull off a gain like this. I'm not saying that that's something that you would see. Obviously, it would be very hard to pull off in practice. But this does go to show that if you're willing to stomach these deviations, if you're willing to sit in a slightly bigger loss than what I think most people would be comfortable with, it could really go in your favor. Is it something that I would do? No, absolutely not. The reason I'm not comfortable doing it is because any one of these deviations could have easily turned into big market moves, and you would stand to lose 100% of your money if you end up hitting that, 9.5% or 95% loss. And so if that kind of thing happens, it's just too much of a loss, right? I mean, it doesn't make sense to trade that way, because it only takes one instance like that for you to completely fuck up and lose all of your money, right? So I don't think that that's a good idea by any means, but a lot of other people have been doing that, and they've been doing it successfully. So, while my job here is to, tell you what I'm doing and what I think is possible, I also want to show you that other people are doing this and they have been able to successfully pull it off. And even people inside of my own VIP group have been doing stuff like this for a long time. People that have a higher risk appetite than me, people who are willing to stomach more risk than I am, they've been able to do this, and they've actually done pretty damn well. So I think that is quite impressive, and certainly something that's worth paying attention to. Now, the other key thing that I want you guys to focus on is the direction of the trend. So this is absolutely huge as well. The trend direction has been bearish for a very long time. Now, I'm not saying that we're going to stay bearish. And if you're watching my videos, my normal analysis, you're going to know that I'm not actually super bearish in this market overall. But one of the key things to keep in mind is that we have been bearish for a very, very long time. And since we're in a downtrend, it might make more sense to generally focus on taking on short positions, whether that means you take on short positions throughout small ranges like this, or just looking for the big moves, right? Because I mentioned there are two key exceptions to what I outlined in terms of these sideways trading ranges. I said the one key exception is price action like this. The other key exception is price action like this. I've already covered the deviations with you. Now I want to cover these with you. These are the actual market moves. If you're trading overall the direction of the trend, you are generally going to be more likely to be correct about your price move. You're generally more likely to be correct and therefore make money if you are trading the direction of the market. And the reason for that is you're just not going against the flow, right? Our job here isn't to change the tide of the market or anything like that. We're just going to jump in where it looks easiest and highest probability to make money. That's literally all you're doing as a trader. You're taking a calculated risk, and as long as you're following a good enough system, it doesn't matter how each individual trade goes, because if you're taking good calculated risks overall, it's nearly impossible to lose money, and it's nearly impossible not to make money as well. So, if you're looking at trading the direction of the trend, that might actually work in your favor. Now, again, when we're already 75% down and we have all the factors that I've been talking about in my normal videos, which you haven't watched, if you haven't watched, just go back and watch them. Make sure you subscribe and all that good stuff so you don't miss them. Obviously I'm a little bit uncomfortable doing that now when we're already, 75% down. I mean, if we were only, say, 50% down, then it's a different story and I can entertain this a little bit easier. But now, I mean, really, how much lower can we drop? Potentially quite a lot more. I don't know. I'm not here to have that debate with you guys today. But, if you do feel like this was too much, here's the thing, is if we do end up kind of retracing, if we do start, for example, here's a great example. If we on a macro scale now were to set a higher high, right? So the last high that we set on a macro scale was up here. The last one before that was here. The last one before that was up here. If we manage to set a high now that's higher than this one, so basically if we rally up and we get above 21,400, if we get like anywhere above this green line, like up here, that would mean that we've now set a new higher high and that we're potentially in an uptrend. This would be a great opportunity because this is a new trend, right? Currently, we're in a downtrend. If we enter an uptrend, this would be a new trend, which means that we could have a lot of opportunities to make money with something like that. And if you generally stick to trading that particular direction more than trading the direction which is opposite to the trend, then you will, as I said a few minutes ago, generally be looking at making more money. You're just generally going to lose less money. You're generally going to make more money because that is the direction of the trend. The other big thing is you're also going to be catching big moves. If you're doing something like that, the big moves that really happen, we talk about 20-30% profits with these little ranges, super achievable. These are what add up. These are really, really cool. But you do get home runs every now and then, and the home runs are always only going to come when you trade the direction of the trend. Assuming you've used that same 10x leverage, which you generally wouldn't. For trades like this, you're going to be dialing that leverage down because you just have a bigger margin of error, right? You need to keep a bigger stop loss. You can't keep a tight stop loss on trades like this because you might be wrong and you might need, to give the trade a little bit more breathing space. If you're using, just for argument's sake, if you're using the same 10x leverage, this would have resulted in a 330% profit, right? In other words, that is a 4.3 times gain. Do the math, 4.3 times gain, not 3.3, specifically a 4.3 times gain, which again, on that $10,000 starting balance, if you manage to pull that off, you're instantly multiplying your gain, right up to $43,000 from 10K. If you've already done a little bit of compounding, let's say you've already managed to pull off, say, those 20% profits in a row, and then on top of that you multiply by 4.3, you can really see the power of this. Again, this is assuming a 100% success rate, so no one's going to pull this off in real life, but the point still stands where if you're able to compound these gains and then on top of that throw a home run onto it as well, now you're looking at really, really big money just starting from a balance of 10K. I mean, really quite substantial gains. It gets very fun when you put in the bigger numbers, right? Like 50K turns into more than $500,000 with these kind of numbers. Again, not saying that this would happen again because you've got to get 100% success rate, but what's very, very interesting about this is that it doesn't take a lot with these compounded gains and with catching the trend to really blow up your account. The reason that I said towards the beginning of this video that this is more likely to work, in my opinion, than, just jumping into a shitcoin project or an NFT project and stuff like that, is because those are things where you just kind of throw your money into something, just kind of sit on your hands and hope that something interesting happens. And you know what? It might work. It did work for a lot of people throughout 2021 and so on, but we're not in that market right now. We're in a very different market. We're in a very difficult market. That's literally the first thing I said to you in this YouTube video if you go back and rewind. We're in a very difficult market right now, and we're not just pulling money out of the fucking thin air like we were before, which means that you need to really step up your game if you want to make money in this space. I know that this isn't what you want to hear, right? Obviously, people want to hear that there are easy ways to make money, but you've made it this far into the video now. We're 30 minutes into the video, and hopefully you're starting to pick up that these are very detailed steps, very, very detailed strategies that I'm going to be taking on. Not saying you should, in fact you shouldn't, because I'm an idiot and I don't know what I'm talking about, but these are very, very detailed strategies and steps to take in this market. And they're not even particularly easy, right? I mean, they're quite straightforward, but they're not going to be easy to implement in the market moving forward. And that's exactly what you would expect during a market like this. If you start to see opportunities that look easier than this, I really want you to doubt if they're actually valid or not, because you aren't able to make easy money in markets like this, just point blank. It just doesn't happen. Some people will pull it off through just absolutely ridiculous levels of luck, but I don't have that level of luck. And you know what? I'm willing to bet that you don't either. That's why you've made it this far into this video, because you're a realist. You're a little bit like me. You accept and you fully are okay with the idea that things might not always go the way they do for that crazy 0.01% of people that just pick the right fucking coin somehow, and you'd actually rather have some more direct input on what kind of results you pull off. This is what this YouTube video is all about. Right, now, something else that I want to talk to you about that is absolutely huge in market situations like this, especially when we are in these downtrends, is that when we're in downtrends, we're generally going to be seeing our altcoins dropping a lot harder than Bitcoin. I'll give you a great example, right? From Bitcoin's all-time high, up here at $69,000 down to where we are right now, is a 75% drop. And actually, if we just measure it down to our absolute low, our low that we set at $15,500, that was a 77% drop. Absolutely huge, right? Because the more we drop down, the percentage drop doesn't actually get substantially higher, but it is a really, really big difference. I mean, just from 30K down to that low is already a 50% is a 50% loss, right? Bitcoin dropped really, really hard. But you know what drops even harder than Bitcoin? Yeah, exactly. Our altcoins drop a lot harder than Bitcoin. Let's just take a random one that's really big, like Cardano right here. We look at Cardano and we take a look at how much it's dropped from its absolute high down to its absolute low. This was a 92% drop. Now, that's not just slightly worse than Bitcoin's 77% drop. That's not 15% worse. I have to make this point very, very clear. That is not 15% worse than Bitcoin's 77% loss. This is like 2 times worse or maybe more. I don't even know the math, but this is way worse than minus 77%, because every additional percentage point you drop when you start getting deep into these losses is a huge difference in price, which means that if you're able to game this kind of thing, if you're able to expect this kind of thing, and then you trade the same thing with altcoins, you stand to make way more money. You stand to make way more money if you're taking up short positions on altcoins than on Bitcoin during bear markets, because they're going to be moving in much more extreme ways. You can do the math on this. For Cardano to recover from that low that we set back to its all-time high would take a 1,170% move. In other words, a 12.75% move, 12.75 times move. You have to more than 12x your money to break even, right? That's a 92% loss. For Bitcoin, we're looking at the very same range. For Bitcoin to pull off the same thing from its low up to its high, Bitcoin only needs to rise up by 330%. The loss is only 15% different, right? We're only falling, it looks like, by an additional 15%, but the difference to make that money back is absolutely bloody enormous. And this is a really, really big deal that you guys have to keep in mind. We look at coins like Ethereum as well. Take a look at this. From its low up to its high is a 440% recovery that it needs to pull, and its loss was only minus 81%. It wasn't actually even that much worse than Bitcoin from its all-time high down to its market cycle low, but to recover it, it has to pull off a way bigger gain than what Bitcoin has to pull off just to recover that gain. This is a really, really interesting point in math. What I'm aiming to do in a video like this is just kind of break down like really quite simple math for you guys, things that aren't actually very complicated. A lot of people think you need like a fancy degree or some bullshit like that to be a good trader. Like, I dropped out of high school, right? Like, you don't need a crazy education for this kind of stuff. You just have to understand the differences with these numbers and just do a little bit of baseline thinking so that you understand what we're looking at here. And you're actually going to have a huge edge in the market. I think that this is really, really important because people don't actually understand how much of a big difference these numbers can pull, especially like I showed you with the compounding examples over here. And when you start to understand these things, it can actually put you at ease a lot more, because if you know that the market is potentially going to be trending down and you just trade the same position you would have done on Bitcoin, but with an altcoin instead, you're going to have a much easier time making money because they drop so much harder. If we take a look at Bitcoin's big drop right here, where from its high to its low back in June of last year, Bitcoin managed to drop by 43% within the space of about 2 weeks, which is absolutely huge. If we look at the same kind of thing that happened on Cardano, take a look at this. Cardano at the very same time, which was... Cardano wasn't actually moving at this time. It's probably this move that we can compare it to. With Cardano right here, it managed to drop by 57%. Absolutely huge, significantly more than Bitcoin, as we've established now. The same kind of move for Ethereum. This was a minus 55% drop. Again, it was still a big drop for Bitcoin, but we're looking at a bigger drop for altcoins. So if you're looking to trade something like that, you stand to make more money with the altcoin market. The same thing applies in reverse. If we manage to get a bull market now, we're probably going to be seeing altcoins recover a lot stronger than Bitcoin. And all of that boils down to the simple fact that Bitcoin is a much larger market. Bitcoin overall is still quite small, but compared to our altcoins, it's much larger, which means that it's much harder to move the market. It takes a lot more capital to flow in order for the price to go up or for the price to come down. But for altcoins, that isn't the case. It takes a lot less money for the market to move up or down, which means that we tend to see more volatility. On top of that, we just see more manipulation as well because these are smaller markets. So that can also make them really just spike like crazy and do absolutely stupid things in the market. And I think that's well worth keeping in mind as well. And what I actually want to lead on from that and talk to you guys about as well is that if you're able to identify, for example, a reversal for Bitcoin, generally what we're going to see, and I do talk about this quite a bit on the YouTube channel as well, is that you're going to see a bit of a trickle down. And this is one of my favorite things, and that's why I'm saving it for last in this video. This is one of my favorite things to be able to identify as a trader in this market, because if you're able to see that Bitcoin might be pulling off a reversal and Bitcoin might be looking pretty healthy, generally, especially in situations like we're in right now where we've been in a long-term bear market, generally what we're going to see is that Bitcoin will first perform very, very well And then, because Bitcoin is performing well, people are going to feel excited and happy and willing to take on more risk. So then we're going to start seeing that money flow over into Ethereum. Ethereum is going to do quite well, and then we're going to see that money flow into the rest of the altcoin market. And what makes that really, really powerful is if we're in a situation like that, you actually stand to trade the same thing on Bitcoin and then on Ethereum and then on altcoins, stacking the same trade idea, the same risk profile. When you've made your Bitcoin trade and you're in a profit, you can open your Ethereum trade, put your stop loss at break even on the Bitcoin trade, open that Ethereum trade, make some money, stop loss at break even, open the altcoin trade, stop loss at break even. Your risk effectively drops. You're opening up some risk, you're dropping it back down to zero, but you're still making money. This is the ultimate life hack, as a trader in market situations like this. And it's moves like this where you can really compound. Again, this is the name of the game. If there's only one thing that you take away from this YouTube video, other than knowing that you absolutely must subscribe to this channel, because this is the most grounded, realistic technical analysis and trading channel on YouTube that there is. If there's only one thing other than that you take away from this YouTube video, is that compounding is the name of the game right here. If you're able to pick that up and make your life easy by trading the same thing in different markets at different time frames, you are going to have a very, very easy time. It's actually similar to, for example, the S&P 500, where, for example, if the S&P 500, a major index in the United States, performs well, that's generally when you're going to start to see that optimism come back into Bitcoin, right? So it's the same thing. We see that trickle-down effect where when the big markets do well, people start feeling happy, they start feeling greedy. When you feel greedy, you want to make even more money because it gets to your head. It feels like a drug, it's an addiction, it's a rush. You want to put that money into new markets. You want to take on even more risk and make even more money. We see the same thing playing out all of the time. And that is actually a really, really big hack to be able to make a lot of money in the market. Between these 4 key things that I've outlined for you guys in this quite in-depth video today, you are potentially going to be standing to make big, big sums of money throughout this year. Now, this final point that I mentioned is actually part of my Trade Insane or Stay the Same package, which is a very, very stupid name for an amazing package that I put together, which consists of an ebook, audiobook, and video course recorded all by me, written by me, narrated by me, all of it done just by me, and it compiles some of the key strategies and lessons I've learned as a trader across the years. Now, this is a very, very valuable package. I would easily say that it's worth $200 at least, and every single VIP member gets this package completely free of charge when they join 𝗤𝗏FLY's VIP. But if that's not something you're interested in and you still want to get it for free, there's a link in the description down below to fill out a form which you can actually use to get this package free of charge. Now, in that form, there's going to be a few steps. Basically, all you have to do is sign up to Bybit, open yourself up to this deposit bonus. You don't have to get this deposit bonus, but if you want to, it's there for you and it's free anyway. Sign up to Bybit, make a little deposit, and then just let me know you've done that, and I'm going to send you that completely free of charge. Again, this is something that I'd easily say is worth $200 in value, if not much more, because it's directly helped me make hundreds of thousands of dollars, and it's saved me from losing hundreds of thousands of dollars as well in these markets. But if it is something that you want to get completely free of charge, you can check out that link in the description down below while you're looking to get these bonuses for Bybit and so on anyway. If you use my link to sign up to Bybit, you're going to be getting this huge deposit bonus right here. If you use my link to Prime XBT, you're going to be getting access to all of these traditional finance markets only with a Bitcoin deposit as well. You don't even need to do KYC to use this platform, and you're going to be getting up to $7,000 right there. Just with these 2 platforms alone, that is $12,000 that you stand to get free of charge, deposited into your account as risk-free trading capital that you can trade with. And on top of that, you can also get that Trade Insane package that I've put together for you completely free of charge as well when you fill in that form down below. If this was a video that you found useful and you want to be able to get more content from me, then that is going to be a great next step for you. If you're not entirely sure about what to do next, if you don't, really want to take that leap into VIP and get inside of the 𝗤𝗏FLY's Academy and stuff like that, which is totally fine, this is still going to be very much worth your time. If you have enjoyed this video and you want me to make more like this, let me know. I want you to drop your comments down below about what you thought about this one. If you have any criticism, feedback, if there's anything in particular that you really enjoyed about this one, and if you have other ideas for what you want me to do now in this market, some real actionable pieces of content that you want me to put out, let me know in the comments down below. These have been key things that have served me very well. Oh, I can't speak. Very well in the past, and these are things that I'm going to be keeping in mind as we go throughout this year, 2023, so that I can really grab these markets by the balls and take as much advantage of them as possible. If you want to take the big leap, these are the steps on screen to join VIP. Just click on each of these red boxes, and you can also gain access to the 𝐹𝗡 Academy course while you're down there. I really do hope that you have been able to enjoy this video. If you did, you know exactly what to do. Hit up the likes, subscribe, tick the bell, do all of that good stuff, and I'll see you all in the next one. Cheers.